Hi, Andrew Cooper here, Advice for Living Financial Planning in Diamond Creek. Just a quick update this Friday on four items that have been in the news a little bit. First one is that US and China seem to have reached at least some sort of an agreement on their trade issues, and so there's been an agreement to stop further tariffs. China has agreed to buy some American produce, and I think the issue of intellectual property is also on the agenda. So that's good. So that again that's now given US markets some certainty, and so that's eased up on the volatility a bit. On the subject of agreements, our friend Boris in the UK has put together an agreement that the Europeans seem happy with. He will be taking that to the UK Parliament on Saturday morning their time, which will sort of be, of course, Saturday night our time. So we should know by Sunday morning what's happened there. The indications are at this stage that it could run into trouble. The important thing then will be what happens if the Parliament doesn't accept it. Will the Europeans say, well, if you don't take this, then you just crash out? In which case, as I said, I don't think the outcome will be as bad as what all the doomsayers are predicting. But anyway, we'll know some more about that on Sunday. The other thing, and I've had some calls about this, is that there's been another class action launched against the CBA, and in particular their Colonial Global Asset Management Company, which is the people who run their Colonial Super. Now, this doesn't affect any of our clients. It only affected people who were in Colonial employer super accounts, who were then moved to what's been called My Super, which is a sort of a low-cost, simple, hands-off superannuation product. And the argument is that that Colonial didn't move these people to My Super quickly enough, and as a result, they have lost money. From my picture on that is that is that if it is successful, and it may not be, is that the the people who get reimbursement will get very, very small amounts. There's talk about $3.5 million or something like that. My suspicion is that it will be the ambulance chasing solicitors who get the money, because if there is a payout of the order of some millions or maybe $1 billion or something like that, they will of course take 30% as their contingency fee, and so the people who are getting the reimbursement, I mean, they wouldn't have got much anyway, I should imagine, because it's only basically what you would have lost, what you would have gained if you had have been in the super fund sooner. So it's probably not going to be a lot of money, but the lawyers will probably make it a fair bit, and I suspect that's what's motivated it. So again, it doesn't affect any of our clients. It's quite a specific sort of a thing. It doesn't affect first wrap or first choice. And the final one is that the doomsayers are out, of course, in terms of the share market. Despite all of the stuff going on with Brexit and the UK, share markets around the world, particularly say US, Australia, UK, have continued to do very well. As an example, the Australian share market since January is up over 1,000 points, from 5,500 to over 6,500. So it's been down a little bit in October, but it's always down in October. I don't know why, but October is always a month where the share market comes back. It's come back a little bit, but as I say, we're still up over 1,000 points. So for those of you in Australian shares, which is most of you, it's been a really good year. So that's about all I had to say for today. Have a great weekend, and we'll know by Monday what's happening with the UK.